Welcome to Smart Stock Watch. Today is July 24th, 2025, and we're diving into the latest earnings report from L3Harris Technologies. Joining us is John, our senior analyst from Smart Stock Watch. John, L3Harris has just released their second quarter 2025 results. Can you give us a brief overview of the company and the highlights from this report?
Absolutely. L3Harris Technologies is a leading aerospace and defense technology company. In their Q2 2025 earnings report, they reported strong results with a revenue of $5.4 billion, which is a 2% increase from the previous year. Notably, their non-GAAP diluted EPS came in at $2.78, which is a 16% increase year over year. The company also increased its 2025 guidance, reflecting strong performance and improved expectations.
Revenue and profitability overview. Let's start with the top line. L3Harris reported a revenue of $5.4 billion for the second quarter of 2025, which is a 2% increase compared to last year. John, can you elaborate on the factors driving this growth?
Sure. The revenue growth was primarily driven by higher volumes, new program ramps, and increased international demand across all segments. Organically, the revenue grew by 6%, which is quite impressive. The operating margin also improved to 10.5%, up by 150 basis points, thanks to lower unallocated corporate expenses and cost-saving initiatives under their LHX Next program.
And what about their adjusted segment operating margin?
The adjusted segment operating margin expanded to 15.9%, up by 30 basis points. This was largely due to the monetization of legacy end-of-life assets and cost savings from the LHX Next initiative, although it was partially offset by the divestiture of their commercial aviation solutions business.
Earnings per share analysis. Now let's talk about earnings per share. L3Harris reported a diluted EPS of $2.44 and a non-GAAP EPS of $2.78, which is a 16% increase. How does this compare to the analysts' expectations?
Interestingly, the non-GAAP EPS of $2.78 significantly beat the analysts' forecast of $2.48, which was based on a survey of 8 analysts. This strong performance was driven by higher adjusted segment operating income and lower interest expenses due to decreased short-term debt balances.
That's quite a beat. What does this indicate about the company's financial health?
It indicates robust financial health and effective cost management. The company's ability to exceed expectations suggests strong operational execution and strategic alignment with market demands, particularly in defense and aerospace sectors.
Strategic initiatives and future outlook. Moving on to strategic initiatives, L3Harris has increased its 2025 guidance and improved its 2026 outlook. What are the key drivers behind this positive outlook?
The company is capitalizing on a generational investment cycle in defense, with U.S. and allied budgets growing rapidly. Their portfolio is well aligned with key growth areas such as space, missiles, and resilient communications. CEO Christopher E. Kubasik highlighted their trusted disruptor strategy, which is driving mission-critical solutions and creating shareholder value.
How does this strategy position L3Harris for future growth?
With a flexible business model that can operate as a prime, sub, or merchant supplier, L3Harris is well-positioned to capture opportunities in national security. Their focus on competitive momentum and strategic alignment with growth areas ensures sustained profitable growth and long-term value creation.
Cash flow and financial health. Let's discuss cash flow. L3Harris reported cash from operations of $640 million, a 15% decrease, and adjusted free cash flow of $574 million, down 20%. What were the main factors affecting these figures?
The decrease in cash flow was primarily due to working capital timing and cash used for settling a long-standing legal matter. Despite these challenges, the company managed to grow its operating income, which partially offset the cash flow decline.
Does this impact their financial health or future investments?
While the cash flow figures show a decline, The underlying growth in operating income and strategic cost management indicate that L3Harris remains financially healthy. They are likely to continue investing in key growth areas and strategic initiatives to drive future performance.
Key takeaways. In summary, L3Harris Technologies has delivered a strong second quarter with impressive revenue growth and a significant beat on EPS expectations. Their strategic initiatives and increased guidance for 2025 and beyond position them well for future growth. John, any final thoughts on L3Harris as an investment prospect?
L3Harris is demonstrating strong operational execution and strategic alignment with market demands. Their focus on defense and aerospace, coupled with effective cost management, makes them a compelling investment opportunity for those looking at long-term growth in these sectors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on L3 Harris's performance in the comments below. Until next time.